Hi, I'm Hal Cranmer from the Paradise for Parents Assisted Living, and I'm here today with Bill Cave, who's up till now been one of my best referral agents. He and his wife really care about seniors, and they've done a great job bringing me wonderful seniors that we've both been able to take care of. And he is now in the reverse mortgage business. I know he runs support groups, all that kind of thing, and he does a great job with that. So I'm eager to learn what he's doing in the reverse mortgage world now. Morning, Bill.
Morning, Hal. Great to see you again. It's
Good
really a
seeing
pleasure.
you. Yeah,
Always a
same
pleasure.
here. Same here. Well, maybe you can start by saying what gave you the idea to switch from the long-term care world to reverse mortgages.
Sure. Just to openly admit, this wasn't some master plan of mine. Like you mentioned, we run support groups, and we volunteer our time. And it was actually those support groups that led me into my current field, which I'll be doing this now till I retire. But people were coming to those support groups, and as part of any, as you know, social, economic, financial situation for somebody, they were talking about reverse mortgages, and I had a lot of the same stigmas. Trying to give advice. I did mortgages, probably over a decade ago, but not in the reverse sense. So I was just trying to give them my best advice, and as I found out more and more and more, I got really curious and interested and learned how much they can help. So it's kind of a short version of why I'm here.
That sounds great. Well, I'm sure you're going to do a great job with them. Maybe we start by the obvious question: what is a reverse mortgage, and who's eligible for them?
Sure. In a nutshell, a reverse mortgage is the ability. It's an FHA. Typically, most people are referring to the home equity conversion mortgage, and it's called a HECM for short. And it is a mortgage. It's a plain old mortgage. You're not trading your house for no mortgage payments, but it allows you to not make mortgage payments. You still can pay into your house and build equity, but you're not committed to that. So you can take that payment and actually add it onto the loan balance and skip payments if you want. Most people do that. That is the simplest version of it. So your loan balance will continue to grow, but the implications of that, you can take that cash flow. You can do a lot of other things. You can use it in purchase situations. So it's probably the simplest way of saying what a reverse mortgage is.
Great. Okay. Who would be an ideal candidate for a reverse mortgage, and who might not be a good candidate for a reverse mortgage?
So 62 and up. You have to be over 62 years of age, and you do need equity in your home. So it's pretty straightforward. It has to be your owner occupied home. It can't be an investment property. It can't be a second property. So those are the big three. You have to be over 62 years old. You have to have some equity, and you have to live in that home. Um, those are the main qualifications.
Okay. Would you advise some people that this is a good idea and some people this isn't a good idea?
It's kind of funny because most people do ask, what is the one situation, or what are the situations where you won't recommend or suggest somebody get a reverse mortgage? And that's really very simple. If somebody's moving in the next several years, a reverse mortgage is typically not for you. And they're changing in the industry. So people are considering, like, I will get a reverse mortgage the day I turn 62 for a whole number of reasons.
Okay.
But as far as, and I didn't mean to cut you off, but as far as
No.
people who don't fit the mold, it can happen. It doesn't always make perfect sense to everybody, but by and large, for the mass amount of people, a reverse mortgage has a lot of implications that they should at least understand.
Great. Okay. I think some people who may not know enough about reverse mortgages have some concerns about them. I'm wondering if we
Yeah,
could address a few of them here.
absolutely.
Um, how does it, in fact, if I'm looking to maybe get Medicaid for either hospital bills, long-term care, anything like that, will this affect my Medicaid payments? Because all of a sudden it looks like I have a lot more money in the bank.
Well, to answer your question, just your Medicaid question, in Arizona, reverse mortgages don't affect Medicaid or Social Security benefits, for that matter, by and large. I'm just kind of generally addressing that topic. But it's considered a loan agreement under Access, and it's a resource. It's taken from your primary home, and it's an asset that gets turned into or taken from your resource, essentially. And there's a very specific line in Access that addresses reverse mortgages, that they're very unique and they are not considered income. So now there's a lot of caveats to that. In the long-term care component for Altex, it will count as an asset if you take it out and put it into an IRA or leave it in the bank and take the interest, and that's considered income, of course.
Okay, the interest is considered income, not the reverse mortgage.
Yes.
Right. Okay. What about like taxes, insurance, things like that you're going to be in escrow for a regular mortgage?
That's a great question. Obviously, anybody who's ever heard of a reverse mortgage knows that they've come from an area of a lot of stigma. There was a stigma associated with them, and they've been overhauled about 5 years ago. That's the thing that most people don't know. So I am very tightly regulated to ensure that people know that they still have to make their taxes, insurance, and HOA payments when they're in a reverse mortgage. The only part that goes away is that principal and interest payment, the commitment to that. So not only am I regulated, but to do a reverse mortgage nowadays, HUD, the federal agency, requires that a person getting a reverse mortgage actually go through counseling. You have to have a counseling certificate with a third-party HUD counselor, HUD-approved counselor, before I can even submit an application for somebody. So they understand those things.
They don't want you to have any surprises, huh?
It's a very, believe it or not, reverse mortgages nowadays are almost one of the safest loans for seniors. And I think that they realized, with vulnerable populations, that they need to understand these things, that you can't just have the wild, wild west where people are saying, don't make any mortgage payments, don't go do this. That's only part of the truth. And, they realize that people need to know the whole truth.
I totally agree. That's true of any kind of financial transaction you make. How about what about interest rates or closing costs or things like that? How do those compare to regular mortgages?
Mm-hmm. They're actually pretty identical. There are different products in a reverse mortgage, meaning there's variable rates, there's fixed rates. The variable rate yesterday, they're based off the LIBOR right now. They're going to move to the U.S. Treasury market bonds. That was about 2.774% yesterday.
And that's beginning of October, just
yes,
for people who see this later.
October, I don't have my mask because we're social distancing. But they're pretty in line with what's going on economically. The closing costs are pretty much identical as well to a traditional mortgage. But the one caveat to that, which I definitely point out to people understand, and again, this is coming from an area of stigma, is that they're super expensive. Now, they can appear expensive, but really what that extra cost is just I call it the ticket into the program. It's a mortgage insurance premium that is paid up front when you get a reverse mortgage that goes to FHA, the Federal Housing Administration, and that is to insure that loan in the case that that loan were to go negative amortization or something like that. Some other myths are my kids are going to pay the loan, or somebody's going to get left with the bill. That is entirely false. They are insured by the FHA insurance fund, so part of that fee up front keeps that fund funded. And, that's another misconception. It's not a profit taken by the lender. It's not a fee that somebody profits from like that. But the traditional closing costs are all pretty much identical to a regular mortgage.
Well, don't regular mortgages have a PMI? Like if you don't put down 20%, you have to pay that mortgage insurance also?
They can. So it's very similar in concept. PMI is usually, exactly what you just said. If you don't put down at least 20%, it's a higher risk loan. So banks require mortgage insurance. In the case of a reverse mortgage, it's probably similar in practice, but very different in theory. It's really just because of the way that there is no defaulting on a reverse mortgage. So the government knows that eventually there's always going to be that inherent sort of component that there'll be a payout by the government. So they just want to keep the fund liquid, essentially.
Okay. So you were saying about the kids being on the hook or not being on
Hmm.
the hook, but people assume that the kids are on the hook. Maybe just walk us through how a reverse mortgage works. Like you sign up for one, you get a whole bunch of cash from your equity in your
Hmm.
home. What
Hmm.
happens as
Sure.
you go through
That's
time?
a really good exercise. I just met with he was a financial planner yesterday, and he goes, "Well, let me get this straight. So the bank is buying your house," and I was like, "Whoa, no, the bank is not buying your house. You own your house. You can move." So the process, just to kind of illustrate it, is you would call me. I would basically just meet with you. I'm using you, Hal, as an
No,
example.
I that's fine.
Typically it's
I
parents,
may
grandparents. Yeah.
you're convincing me to meet with you, but I got a few years till then.
Right, right. But believe it or not, I often have this discussion with financial planners, elder care attorneys, estate planners, tax preparation people who are advising these my clients, and they would come to me and meet with me. I'd answer all the basic questions. Really, it's elimination of the myths while also understanding the goals of what somebody's doing with a reverse mortgage, because there's a lot. It's not just rate term payment like a regular mortgage. There's a whole, it ties into the goals of what you're trying to do in retirement. So is that person keeping a reverse mortgage, wanting a line of credit that acts more as a safety net? Are they taking out a lump sum to modify the home so that they can age in the home? Is it one widow with somebody else going into one of your homes and they have to finance that long-term care cost? So I need to understand the goals, because that's maybe one of the main things of a reverse mortgage and why I specialize in it. I don't do 30-year mortgages. Now my company does, and I
Mhm.
certainly could handle that, but it really takes somebody to understand how and why a reverse mortgage is structured the way it is, because it can be structured different ways. So they would come to me, we'd have a conversation. I'd prepare a document that is basically a proposal or a snapshot of exactly what we spoke about, down to the numbers, meaning equity, the amount of equity that can be accessed. Typically around 60 years old, that's about 50% of your equity. 70% is, as you age older. So if you're 80 years old, you can access about 70% of your equity. And then I would explain the process in short. It's a relatively simple process. Explain the fees, explain the mortgage insurance, of course. There are interest rates, so it would be laid out in a big amortization schedule. But believe it or not, people typically have the same amount of equity. Again, I'm generalizing, in about 5 years as they do the day they take out a reverse mortgage. So then they can determine, I mean, I find that interesting. And then they
Mhm.
determine how they want that money, or if they even want the money. In some cases, they leave it as a line of credit that continues to grow over time, believe it or not. They can take it as annuity payments, like an annuity, or they can take a lump sum and do something, buy the RV or, and they can also use it in a purchase situation. So I don't want to, go into all those areas, obviously, but you can
Right.
upsize, you can downsize. I can give you some examples. And then I would just basically lead them through the process. And the process is very similar to a traditional loan. There's an FHA ordered appraisal, there's a closing, there's some basic income documents and things like that that I would gather. But in general, they're much less, uh, they're not credit score driven. They're not, document driven like a traditional mortgage.
Okay, great. And then after they've closed with you and everything, and they're either making payments or letting it accumulate,
Mhm.
what happens at the end? Say they pass away, how does it work with the heirs?
Oh, that is a great question. And I should add into that previous part that they get a statement every month, so they understand exactly what's going on.
Okay.
But to get to your question, that's one of my favorite questions is that you have about a year. So I'm just, in a sensitive way saying if somebody either moves or they pass away, whatever balance is left has to be paid. So just as a quick example, if you have a $300,000 house, and let's say somebody had a $50,000 mortgage that they were continuing to pay, they do a reverse mortgage. That mortgage goes away, so they don't have to make a payment. And let's say that they live for another 20 years or so, just to use rough numbers. And that $50,000 mortgage, because maybe they pulled out some money and helped the grandkids or took a vacation or did various things or paid their long-term care policy or paid their life insurance policy. Let's just say it's $100,000. And without counting appreciation and getting into the numbers, that $300,000 house now has a $100,000 balance on its mortgage. And if they pass away or sell that house, very simply, they have a year to do it. And that $100,000 is paid, and the other $200,000 passes on to the heirs.
Great. Perfect. Okay. What if it's more than, let's say it's 300,000 and the mortgage balance accumulates, or the house goes down to 200,000 or something like that, and you owe 220 on it or something like that? What happens then?
So, or the other example I give is the 2008 market crash.
Yeah.
Homes
Mhm.
depreciated tremendously. Um, in the case of a negative loan balance, which I usually term that as extreme because it's almost like seeing the end of a 30-year term in a regular
Right.
mortgage, which doesn't always happen.
Yeah.
But to answer your question, if it's a negative loan balance, this is why there's that upfront mortgage insurance premium. So let's take the same example, $300,000 home, just to use good numbers, the loan balance is now $350,000.
Okay.
So the person passes away or sells their home, they want to move. There's no equity in that house. They sell the home. The heirs would technically sell that home, or the estate would sell that home, and then there's a $50,000 negative balance that gets paid by the FHA insurance fund. It's what's called a non-recourse loan, meaning that nobody's responsible for it. The house is the collateral for the loan.
The
So
government's responsible for it. They're the ones who
correct.
take the hit.
And just to go a little bit further, because it's a common question, is what if the heirs do want that house? It's a family home and they've had it in generations and they want to move back, or they
Sure.
just want to live there.
Right.
They can buy that house, that $300,000 house that has a $350,000 mortgage. They can buy that house for 95% of the current market value at that time.
Wow.
And the difference is paid again by the FHA insurance fund.
So they pay like 285
Right.
and get the house.
And they get the
Wow, that's
house.
great. That's
Yeah.
awesome.
And then,
Very cool.
and another, just while we're on the topic, the deed never passes hands. The bank never owns the property.
Right.
Those are the
They just release the lien.
right. Before I was in the
Okay.
business, I always thought that you traded your home for no payments. That's like,
Right.
the way I
Yeah.
used to think of it.
Wow, that's good to know.
Yeah.
So last question, which is on everyone's mind, how are reverse mortgages affected by this whole COVID current situation?
And, I would encourage people to talk to me, but really what COVID did is what a negative economy does is it just exacerbates a lot of the things that happen when people are in retirement. Not having enough money to outlive their money, not being liquid to take advantage of various things, not being able to take advantage of paying medical bills, or having to work well beyond your retirement age just because you need that source of income. So a reverse, in a not great way, COVID and the negative economy and things like that have really shown a lot of people why being liquid and not having that commitment to pay that mortgage are such an important thing. Just quick numbers, a $200,000 30-year mortgage at 4%, Hal, is $343,000 over the life of that loan. That's not
Wow.
appreciation. That
No.
is retirement income coming out of Social Security or your asset accounts.
Right.
To not have that commitment to do it, you can definitely take that 343,000 and pour it into your mortgage, and you won't even be able to put it in because
Right.
no balance is going to get that high. But to not
Hmm.
have that pressure of the commitment to make that payment for a lot of people, it's something
It's
that,
huge.
and kids understand it. I want my kids to inherit as much money as they can, but I don't
Right.
want my mom eating cans of soup just to leave me a couple extra $1,000.
Exactly.
I want
No, you
her
want
to
to take
use
care of your parents.
right.
Hmm.
And that's really what
Fantastic.
a reverse mortgage started showing people, that they don't have to. People were laid off. They do a reverse mortgage. The first thing I hear is, "So you're telling me I didn't even have to keep working?"
Wow, that's
You
great.
know,
Yeah, no,
it's
it's
rewarding.
fantastic.
It's rewarding. It's why I do what I do.
Awesome. So, did we anything else you want to bring up that we didn't that people should know about?
That's the biggest thing. I think, I appreciate being on the show, but coming from the long-term care side of things, the long-term care industry, I would just encourage people to, come and talk to me and get the facts, separate the facts from fiction, because there's really a lot of past stigma. They're one of the safest loans right now. Um, I, I wouldn't be doing what I'm doing right now. I told you, as you mentioned, my wife continues in the long-term care industry, but
Right.
I've dedicated my life to this because I know what's happening. I didn't get a chance to talk about it, but and I won't go too far into it, but they are now being seen as a financial tool in retirement. Reverse home equity, having the home equity conversation in retirement. And just to give you a quick 20-second example, if I had a $375,000 portfolio when I retire, my financial advisor would tell me I'd probably run out of money at the age of 86.
Wow.
If I used, and that's at 6.5%, draw on that money.
Right. Which is
And
hard to get. Which
well,
can
that's the
be.
return, but that's withdrawing 6.5% per year
Oh,
to
oh,
live.
okay. Okay.
So, because a lot of this does tie heavily into the finance world, and that's why
Yep.
the change is occurring as well. So, but I won't get into
Sure.
that. But if you were to use a reverse mortgage and just have an alternate source of tax-free income, because there's tax advantages. I'm not here to give tax advice and legal advice. There's a whole lot of implications with a reverse mortgage for that positive. And
Great.
if I had, in that example, a tax-free source of income to negate the down market years throughout that duration, my portfolio, still taking 6.5%, hold
Hmm.
on, my portfolio would be worth $1.135 million
Wow. That's quite a difference.
at age 86.
Yeah. Yeah.
Yeah.
Keep on going.
Right. So
Keep on
you
trucking.
can, yeah. So you can understand now. Think of the implications for the financial advisor that's managing that money. Sure, I have a mortgage, but it ain't going to compare to what happened with compounding it. That's the power of compounding interest, and
Oh,
the
it's huge.
financial world is realizing that, and that's really why I'll be getting a reverse mortgage the day I turn 62. Not to just immediately withdraw money. You can certainly do that, but
Right.
just to have it there as a liquid source of funds, throughout my retirement.
It's going to make you feel so much more secure too.
Oh yeah,
Fantastic. Well, Bill, as you always, it's great to see you. I miss working with you on the long-term care side, but I
yeah.
might come talk to you about a reverse mortgage here, and I recommend it to as many people as I can, at least to talk to you about it. So thank
Sure.
you for your time today.
I
Um,
definitely appreciate it. I have an office in Arrowhead, 71st and Bell, but I go all throughout the valley, and then obviously email and always call me. I love to answer questions. I spend a lot of time talking to people who may never do a reverse mortgage, but at least I've given them information. So.
okay, we'll put all your contact information in the right up below of this video, but maybe if you could just throw out your website and email there, how
Sure.
people could get in contact with you.
Sure. It's bill.cave, Cave, at Fairway MC, fairwaymc.com. Fairway is one of the largest reverse mortgage companies in the entire country. So
great. And is fairwaymc.com the name of the website too?
And then my website is fairwayreverseaz.com. So www.fairwayreverseaz.com.
Awesome. Thanks so much, Bill. Have a great day, and thanks for letting everyone know about this great financial vehicle.
Thank you, Hal. Thanks for having me.
All right.
Great to see you.